You are watching TheoTrade. This is Don Kaufman. It's May 29th, 2016, doing a weekend update on this Memorial Day weekend. First, we'll give you a quick review of what we saw in action last week. More importantly, an overview of what we can expect this next week. And of course, it's going to be a shortened week. Monday, Memorial Day, holiday weekend. We're going to have a shortened week. It's going to be 4 days of trade. However, there are a number of key catalysts that are going to be out in this first week, of course, of June. So again, let's start off with a quick review of last week. And one of the first things I want to mention about last week was, well, it's the first time that we've traded outside of the expected move in quite some time. So as you guys know, I'm a bit of a quant. I have tendency to look a lot at expected move. If you're not familiar with expected move, get familiar with it. What it happens to be is, okay, for the SPX in here, if you look at the option chain, all right, is ultimately dictating what the marketplace is expecting price action to be. In this case, for the next 2 days, for the next 3 days, for the next 5 days. I mean, that's what option pricing ultimately does. That's what option pricing dictates over there. So rather than looking at past stock price movement on a chart, we actually look forward and see, well, what's the market expecting in terms of price action this coming week? Well, again, I'll digress for a moment, look over to the chart, and you'll see the SPX move from 2050 right shy of 2100. It's a 50-point move, pretty clean. Well, last week, the SPX was only expecting in the neighborhood of right around a $30 move. Now, if you're not familiar with where to find that, you can cruise over, and if you are on thinkorswim, to the Analyze tab and use Think Back, just end of day data. Okay, so with that end of day data, you can just look back at, for example, last week. So here we are on May 29th. Shoot right back over here to, again, May 22nd now is the date we're viewing. And we'll review, for instance, the last 5 days. As I said, just shy of about a $30 expected move. Specifically, a $28 move was being priced in. What did we see? Again, we saw a $50 move to the upside. It's the first time, right, in a while that we've seen a move outside of what has been expected in a 5-day window. However, I have been saying day in and day out on these evening and weekend updates, this is not a time that you want to sell options premium in the short duration options. And I'll reiterate that time and again. What that means is, and this is kind of an unusual week, and I'll explain that in a moment, but what that means, you don't want to sell options in short duration. You know, there's options listed in the SPX and a lot of different underlyings out there. There's weeklies. Okay, you got to be really careful of selling options in weeklies when the market is throwing off on an intraday basis signs of volatility. So intraday, we've been seeing quite large swings. Now, that's actual stock price movement. For those of you that are not familiar, actual stock price movement, it's called historical volatility. So the actual movement of stock is high, but the options market is pricing these moves very, very low. So on an intraday basis, we're moving these vast amounts. However, by the end of the week, we're not moving drastically. What that kind of means, we've been moving up, we've been moving down, we've been moving up, we've been moving down. But at the end of the week, where do we go? Absolutely nowhere. However, this previous week, again, this is true of the whole marketplace, and it's why I use the SPX, because I don't care whether you look at the SPX, you look at Google, you look at Apple. For the most part, they did what the broader market did, and that is they moved to the upside. So again, you saw, even the previous few weeks, these large intraday moves, okay, but staying inside of a relatively small expected move, on a 5-day window. Well, last week was different. We exploded to the upside. Nevertheless, something very unusual that exists this week. Now, again, we've cut a day off the week, right? So Monday, tomorrow, Memorial Day, we're off. However, in the SPX, you have options that are going to expire on Tuesday. Kind of cool, huh? They're the end of the month options. Then you've got the standard Wednesday expiration options, but then you've got Friday expiration. We have 3 expirations all falling inside of 1 week. Now, that's specific to the SPX. Why is that so important, though? It's giving us a reading of volatility for 2 days, for 3 days, for 5 days. Each one of these readings, shockingly low. I mean, when was the last time, okay, if ever, that I've seen a volatility at 10% for 5 days? I am not sure. And again, I'm much more of a quant geek than you guys may ever know. I'm not sure I've ever seen an expected move. All right. Now, granted, there's not really 5 days. There's 4 days. But even 4 days to be down at $21. What that's saying is, and again, there's billions of dollars being traded in this marketplace. And look at some of the open interest in here. It's huge in the volume. You know how many options are traded in 10,000 contracts of just this 21.15 strike? 4 days to go. That's 4 actual trading days, but 5 days to go to the expiration. Nevertheless, huge volume, okay? Hundreds and millions of dollars just in these options, but there's really billions that rest in these markets, and the markets dictate that we're only going to move up or down $21. What it's telling you, again, you want to be a buyer of gamma in the short term. What that means, we're going to get some great opportunities to trade options on an intraday basis this week. And I'm going to further that, and then we're going to go jump over and we're going to go look at a trade here in a moment. But I'm going to further that with looking under Market Watch, and we're going to go cruise over to the calendar, because the reason I'm finding it like shocking for a $21 expected move, there's a lot of possible catalysts this week. I mean, where do you want to start? So on Tuesday, all right, the S&P, Case-Shiller, yada, 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 I don't really care. All right, Wednesday, there's an ADP employment report, but nobody's listened to them. There's PMI, manufacturing, yada, yada. Again, I yada, yada right over the best part. No, I didn't. There's not a huge amount going on. ISM manufacturing. However, again, as the week progresses, now it's going to get interesting. First of all, there's an ECB announcement, okay? That is coming on Thursday. It's at 4:45 in the morning. Now I'm on Pacific time, so it's really freaking early. If you're on the East Coast, you might get up for that one, right? Be aware, ECB announcement on Thursday. You'd think that might pack a little bit of volatility, a little bit of risk in there. Then you got a 10-year bond auction. All right, but that can move markets. A 30-year bond auction. They moved the petroleum report. Don't ever forget about your petroleum. They moved it for the petroleum report, which has been a market mover. They moved it to Thursday this week because it's a shortened week. And did we forget about on Friday? It's Jobs Friday. Why? It's the first Friday of the month. 5:30 in the morning. The employment situation. Okay? The fact of the matter is, it hasn't done much to the markets. But this is the last employment situation before the FOMC meeting that's going to be in mid-June. So you can't take that one with a grain of salt. It doesn't matter what you think the employment situation is going to be. The Fed's going to use the data. That's what it comes down to. If they're going to use the data, it's going to be a market mover. So is the ECB announcement. I mean, everything coming out this week are market catalysts, and there's two big ones. The ECB and the employment situation. Everybody loves a good employment situation on a Friday morning. Can't go without it. Nevertheless, the SPX, dead as dead could be. With that, okay, there's a trade opportunity that I'll be fishing around for come Tuesday, Wednesday. Now, and there's a trade opportunity that I discussed last week that I did not execute. First, let's go to the trade opportunity that I didn't necessarily miss. Okay, I just haven't executed the trade yet. One of the first ideas was an ExxonMobil. ExxonMobil's been ripping to the upside lately, and I wanted to place a bearish trade on this. Okay, and I mentioned it last Wednesday. So again, little less than a week ago was last Wednesday over there. It was May 25th. In the evening report, I mentioned getting a bearish trade onto ExxonMobil. I didn't execute it, and I didn't execute it because ExxonMobil kept trading down, and then on Friday, the volume was so bad I didn't even want to execute into that. I am still looking to open the ExxonMobil trade. Those of you that are TheoTrade members, we will absolutely shoot that out to you. All right, so the moment I execute the ExxonMobil trade, I'll be more than happy to send that out to you. you can see, again, I'm out here 33 days out, depending upon when I execute that trade. And again, I'm very picky about my execution. I will not get into a bearish spread on a down day. It is silly to do so. Okay, so I needed to be, and I will be, very particular again about how I execute trades, because over the long run, if you have poor executions time and again, you're giving yourself no probability of being able to make money. So ExxonMobil, again, look for it as the week kind of progresses there. We'll shoot that trade out to everybody. Yes, we are emailing out the trade ideas now. Next, NVIDIA. Okay. Why NVIDIA? Well, I run scans. I like scans. I like to run scans. Why do I like to run scans? For contrarian trades. NVIDIA is one of the ones that came up on my scan. And there's a few. There's, Salesforce over there. All right, Applied Materials. But I really like the setup in NVIDIA. And it wasn't just this scan that brought it up. And again, for those of you that don't necessarily scan, well, you should. Because anything you can do on a chart, you can scan for. I've always been accused of being an anti-chartite. Guess what? I'm coming out! I am an anti-chartite. Why do you spend time looking at a MACD, a Fibonacci, and a Bollinger Band? Just scan for it. I mean, the time that is wasted out there, and if again, I've kind of gotten to that maximum frustration level as most retail clientele, they spend a vast amount of their time trading, looking for setups, looking for candidates. If you know what you're looking for in a chart, just go build a scan for it. It's really not that difficult. If it is, well, we'll spend some time here at TheoTrade during some of the coaching sessions. We'll build some of the scans for you. Okay, we're talking minutes, and no matter what you got over there, whether it's price performance, statistical data, all right, popular studies, RSIs, price performance, goes on and on and on and on. Crossover studies, I got my Bollinger Band and my MACD. All I'm saying is I find the scan much easier to be able to quantify precisely what I'm looking for, and I was able to find the candidate NVIDIA. NVIDIA's had a fairly wild breakout to the upside. And in this most recent breakout here, you are looking at the last 11 trading days. Count them, ladies and gentlemen. There's 11 trading days where the stock has moved. Again, off an earnings period. This is about +5 off the earnings announcement, which was double the expected move. Then the stock continued to actually rally up. Now, this is as close to what we would term a parabolic move. And if you've ever heard that terminology used, parabolic is just, for the most part, ever increasing upside intensity, or downside intensity for that matter. But in this case, if you open up to a 3-year chart, it's fairly staggering, the move that you've seen in the last 11 days. I think you'd have to agree of the statistical significance of this move. Now, just because we moved up doesn't mean that we can't move further up. The trade I'm looking at, though, is a contrarian trade. I don't believe this kind of escape velocity is going to maintain itself. As such, you go over to the trade tab. I got to give myself some room in here, some room to be right, some room to be wrong. The underlying right now is trading right in around $46. And I'm going to wrap this one with an in-out spread. And I say wrap it with an in-out spread because I'm buying a slightly in-the-money put. Okay, this is a 47 put and selling a 45 put. Now, if you're worried about liquidity, don't be. Now, I'm going to tell you why not to worry about liquidity in this case. There's not a lot of open interest right around where I'm trading. Okay, and that's because, number one, these weeklies have only been around for about a week. So they haven't had time to accumulate a huge amount of open interest. Number two, okay, if you open up all, you'll see that there is quite a bit of open interest, but it's further out of the money strikes. It's because the stock has moved up so substantially in such a short amount of time. But again, these options have not had time to accrue much open interest. If you look at the 19-day options, there's 10,000 strikes out here and 1,000 and 1,000, 1,000. There will be plenty of liquidity in here. Okay, it's not my concern. When I look under today's option statistics, there was still 18,000 plus contracts traded. That was on Friday, too. That's a really light day. Things still did 18,000 contracts. So I say don't worry about liquidity. Liquidity to me is everything. If that thing isn't liquid, you're never going to make money trading illiquid, underlyings. Liquidity is everything. But believe me, I get my ducks in a row, and I made sure that liquidity in here suffice to say, was going to be, well, liquid enough to make this worthwhile. So the 47 puts, they're already in the money by $1. Great. I buy the spread for right around $1. I'm going to risk $1 to be able to make $1. The trade, again, depending upon where we open up on Tuesday, if the stock opens up, phenomenal, fantastic to be able to execute this thing, under $1. Now, we're going out there and we're trying to risk $1. Okay, we're trying to risk about $1 to be able to make anywhere from 55 to 65%. So if I go out there and I pay $1 and that equals my risk, all right, I'm trying to make between 55 to 65%, which, what does that equate to? I'm really trying to make between 55 cents and about 65 cents on this particular spread. And the reason I do that, to be profitable on here by expiration, we got to be below 45. But if we get down to like 44, 43 and a half, which has a really high probability of touching those levels, this trade will make, all right, it's 55, 65%. The whole key is here, look at what the probability of touching those levels are. So we go cruise over to probability of touching, all right, you got upwards of like a 65% probability, okay, of making that 55% on this trade. Think about it for a second. It's a high probability trade with nice defined risk. And it's one of the key components of what we teach here at TheoTrade. Last but definitely not least, if you have not looked at our site recently, well, do so. And I'm actually going to show you a few things over here. If you haven't been on TheoTrade, go to TheoTrade.com. You got to check out under the blog. We've actually got this new Theo Dark report. It is quite phenomenal. If you're into reading some material over there, I think you guys will really enjoy a few of the articles we're putting together on a day-to-day basis. There's multiple articles coming up on a day-to-day basis over here. Seems to be catching fire right now. Heisenberg is our writer for, of course, our TheoTrade articles. But check them out. Again, just go to TheoTrade.com. Go over here to the blog. Go under the Theo Dark report. We've also got links directly in our daily email for the Theo Dark report. Again, enjoy it over there and feel free. Shoot us an email anytime. It's just support@TheoTrade.com. Have a great Memorial Day weekend, everybody. And see everybody come Tuesday right here in the chat room. Have a great weekend. Bye-bye.